Hey, John Mayfield, the real estate tech guy. Yes, I am sporting a hat because it's early in the morning and I want to do a video for you on a financing definition you might see on the real estate exam. So, and hey, it's all right to wear a hat. I'm sure you wear one from time to time too, right? So, I want to talk to you today about a balloon mortgage. Now, I could have a prop of a balloon and I could blow air into that balloon, which means that you're not actually paying payments. They're not amortized so that the loan will be paid off in full, and you keep blowing air into the balloon, and at some point, that balloon mortgage comes due and payable. Let me give you a couple of good examples. I got my real estate license in 1978 at the age of 18. Many of you may know that. I mentioned that on many videos. And some of you are quickly calculating how old I am, so hopefully I look good for my age. I think I do, but hopefully you think the same thing. Maybe it's just me, right? Let's get back to the real estate definition of a balloon mortgage. That's what you want to know. And in 1980, interest rates really went high. I mean, up to 20%. Now in 1978, when I got my license, they were around 7 or 8%, kind of similar to what they are today in 2024. But there was a time in history, and I practiced real estate then, when interest rates were really off the chart. And it was tough to sell houses. And so a lot of times sellers did not owe any money on their mortgage. And so what we would encourage or suggest they do is finance their home. They needed to move, they needed to sell the property. Some of the properties, the parents had passed away, and so we were dealing with heirs, and the homes were paid in full. And so we would say, if you would finance the mortgage at, say, 10 or 11% interest, which was a great interest return on your investment, maybe the buyer then could give you a down payment, and we would just have a balloon mortgage in 3 years, and hopefully in 3 years interest rates would settle back down to a good rate, and everything would be fine. Now, the news media said this was all going to blow up in our faces, and it never did. But it was a great way for us to sell property back in the 1980s when interest rates were very, very high. We would, again, ask the seller, would you finance the home? You owe nothing on it. The buyer can give you 10% down. And if you could give them a 10% interest rate, at the end of 3 years, the buyer will need to go out, refinance the home, and get a traditional mortgage from a local lender or savings and loan. And I'm telling you what, it worked. And it was great for the borrower because they were getting a 10 or 11% interest versus an 18 or a 19% interest rate. And yes, the only downside is they did have to refinance that home at the end of 3 years. Many of those sellers appreciated the monthly payment and just extended the notes for those folks and let them continue to finance it. So that's called a balloon payment is what comes up. The definition for that loan is actually called a partially amortized loan, okay? I refer to it as a balloon loan. You might see it as a balloon loan, but what it's really also called is a partially amortized loan, and it has a balloon payment, okay? And so I finance my home to you, and it's a 30-year amortization. It's a lower interest rate, and it balloons in 3 years. So we amortize it over a longer period of time, but at the end of a short period, 2, 3, 4 years, that payment balloons and comes due and payable, okay? So, you have to be kind of careful with that. Some lenders did that. And by the way, I did read in a book today in preparation for this that has to be disclosed to you on your truth in lending papers if it is a balloon mortgage, because a lot of borrowers a few years ago would see these offers. Hey, refinance your property at this low interest rate. And a lot of people went and refinanced their homes at the lower interest rate. And they thought they were on an adjustable rate mortgage. But what actually happened is the loan ballooned at the end of the 3 years. And so if it balloons, I said ballooned, but I meant balloons. if it's a balloon mortgage, it could be due and payable. If you can't come up with the money, you could be in trouble. I actually had that happen to me years ago from a local lender. I won't mention any names. The gentleman actually passed away not too long ago, and he's a great guy, and I really liked him. But, unfortunately, I had taken a loan out with the gentleman who was the bank president. He switched banks, and it was just a little rental house. And the other guy who was there, who took his job, he and I never really, I don't know, I never talked to him that much. I mean, I said hi to him, but I think I don't know what was going on at the bank or whatever, but when the loan came due, I thought it was an adjustable rate mortgage, and it was a balloon payment, a demand payment. So I literally had to go to another bank who graciously gave me a loan. It was not a problem in that respect. It was just the fact that I didn't realize it was a balloon mortgage. So you have to be real careful about those. And everything worked out fine for me, and I sold that home and made a profit on it down the road. But I didn't realize the papers I signed at the bank were actually a balloon mortgage, and the bank had the right to call that note due and payable. And if I couldn't have gotten a loan, could have been a real tragic, horrible situation for me at the time financially, but everything worked out. So just be cautious. If you get a balloon mortgage, you have to understand if the lender, the mortgagee, doesn't want to extend that loan or renew it, they could call the note due and payable, or it is due and payable when the balloon payment is required. And if you don't have the money to pay that, then they can start the process of foreclosure, which we will talk about as we get there as well. So again, a partially amortized mortgage is normally have a lower interest rate. It's amortized over a long period of time, maybe 30 years or 20 years, so that the payment will be low. And so at the end of 2 or 3 years, you have what is called a balloon payment, where you need to pay that mortgage off. So since we're amortizing it over 30 years, the monthly payment's very low. If we amortized a $200,000 loan over a 3-year period, you'd have a huge payment. But if we amortized that same loan over a 30-year period, you get a much lower payment. And so you can handle that payment, but at the end of 2 or 3 years, you've got to go out and refinance it. Now, it worked great in the early 80s when you had high interest rates. I've done many balloon mortgages with folks who financed their home to me, and it allowed me an opportunity, rental property, investment property. It allowed me the opportunity to go in, rehab those properties, paint them, carpet, do the things I needed to do so that I could easily increase the value of the property and then go to a lender and refinance that property. Partially amortized mortgage that has a balloon payment at the end of the term. I hope that was helpful for you. Hey, globalrealestateschool.com. We have some great flashcards. If you're a student, those are included for you. And guess what, students? I have a whole glossary with definitions, and I'm taking these videos and plugging those in. So don't forget to check out the glossary, Global Real Estate School students. It's that little icon up in the top right corner, which is why you should go to Global Real Estate School. Not only do we have glossaries for the national content, but we are building them for each specific state we are approved in. So we're working on a new state now, Arizona, and Jean, my virtual assistant's working on that glossary as well. But we've got some great tools at Global Real Estate School. We have practice exams. We have the digital flashcards. I have audio feedback when we miss a question. And it's not just clicking your mouse and reading text on a screen. It's interactive. I had to take my continuing education in a state where I'm approved as a licensee for my school. And I don't mean to say anything derogatory about my competitor, but I did do a screen recording because I thought, if the real estate commission in that state ever wants to, I don't know, if I ever need to appear before them about my school for some reason or the other, I got some good ammunition. There were no visuals, there was no audio. It was just text on a screen and clicking your mouse. And I thought to myself, that's why real estate schools and online courses, I should back up. That's why many online courses have such a bad reputation. Not at Global Real Estate School. We won't do that to you. I want you to have a good time online, and you can do that through globalrealestateschool.com. Hey, thanks for watching this video. Didn't mean to get on my soapbox from time to time, but you know what? You got to have a little bit of fun, right? Hope you have a great day. Subscribe to our channel, listen to my podcast. I will talk to you soon. Have a great day. Bye.